Entering a counter trades is one of my favorite way of entering the financial market. And what I mean by counter trade is when the price is pushing down in a nice trend and reaches a certain level where we have a buying pressure and an area where we can expect a bounce out of. And these are the areas I call a counter trading zones. And once the price reach this area, I look for one of my entry condition, either with an aggressive way, which is one of my engulfing pattern, or less aggressive way, which is one of the double bottom pattern. Once the price reach that area, I look for a quick bounce, take my profit, and then manage my trade if I see a momentum, or exit my trade, because once the price reach a counter trade zone, it either reverses or it hits your take profit with a little bounce and then continue with the trend. So it is really important when you are taking a counter trade, you must set up your stop loss and must set up your take profit and exit your trade in the right time. So before I start my video, let me inform you that Ramadan is coming next week, so I won't be doing any other activities. So I'll be trading most of my day, and I'm planning to come live and do market analysis live, look for the entry condition, look for the entry patterns, so that we can trade together, look for the possible trading opportunity throughout the day. So it's going to be fun. So make sure you subscribe to my Instagram, because I'm planning to come live on Instagram, because it might be a bit slow on YouTube. It would be a good idea if you just follow me on Instagram as well, so that once I come live, you won't miss it. So in today's video, I'm going to teach you the way you enter the counter trades, the way you set up your stops and targets, and the importance of entering the trade in this major area of value. And I'm only going to show you the commodity zones I've sent to the members and the way we took the trades just with the commodities and with the entry condition. And I'm also going to show you one forex pair where we had a losing trade, but then we had another winning trade in the same area of value. So if you want to skip this part of the video, you can skip it directly to the analysis part of the video. But if you want to listen to this part of the video, then I promise you will learn something out of it. You will learn the importance of entering the trade from these major area of value. So starting with Palladium, I have sent these zones to my members. That price is now in the major area of value, and we already have a formation of a double bottom pattern, and let me show you that right here. As you can see, the price was at this point, we had a valid double bottom pattern, and we were ready to take our trades with a condition. We had a condition at this major area of value, and as you can see, with the power of entering with the conditions, price did pushed up massively, and this was the counter trading zone. And like I just explained in the first part of the video, that once the price reaches the counter trade zone, it either reverses or it hit your take profit and then falls and continue with a downtrend. As you can see, the price was pushing down in a very nice downtrend from quite a while now, in a massive downtrend. And I want to show you one example here. And price did hit this major area of value and had a little bounce, and then it did not decide to push up and reverse, but instead the price continued to push down in a trend until it hit this level of major area, which I've mentioned to my members. Now in that case, if you would have managed this trade, you could have got a nice and massive profit, or you would have come out at the break even if price did not want to continue with the trend. So that is how you manage the trades at the counter trading zone. But the interesting situation here, what do we have after that? The price hit the level of major resistance. I've immediately informed member, because the price really pushed up hard and really quickly just within 2 days, and I've immediately sent a next zone to my members. Let me show you that. Right here, I've kept my members updated, and as you can see, I've already informed them that we have a massive push up from the major zone, and now the price has hit the level of trend continuation zone, and I'll be looking to enter my bearish trade from this area of value. And right here, as you can see, price did fall massively. Now I did not see any sort of entry condition here, if you're wondering, on 4 hour and on 1 hour time frame, but on a daily time frame we did have a nice bearish engulfer if you are a long term trader. So that is what I want to show you, the power of entering with the trade. And as you can see, the massive push up from the support and the massive push down from the area of value, which is the level of resistance up there, and price did pushed up and down from both level massively, and that is how you can make money in the financial market just by following some rules, just by being disciplined and wait for an entry at the right place without any sort of guessing game. And these moves happen just within 2 to 3 days, and imagine how much money you would have made if you entered at this area of value. And that is how you separate yourself from the 90% of losing traders. So one of the zone and one of the nice winning trades we had here on Palladium. So let me show you the next one. We have cotton. So this was the zone sent to the members. The zone was marked on a daily time frame, and the price was right here hitting that zone at this point. And I've already informed members that once the price hit this zone, I will look for one of the buying condition. Now let me show you what buying condition we got at this area of value. Right here on smaller time frame, we had this nice 382 candle, and this is the entry condition I often talk about in my YouTube videos. And if you would have entered right here, let's say you entered a little bit above this candle, ATR of this candle is, as you can see on the top left, 1.02. So let's do it. 1 ATR 1.02 right here, 1.02, and stop loss is set exactly the same, 1-to-1 risk to reward ratio, something like this. Even you have entered few pips above, you have your take profit hit. So here you can see a very good example that the price did not want to continue to push up and reverse. Instead, the price just hit our take profit and then falls. That is why I always say very important to keep your stop loss and take profit there, especially when you're trading commodities. Very risky if you're not placing your stop loss and just hope the price will reverse. It won't happen every time. It can happen, and that is why you can push your stop loss to break even if you want to manage your trade. An example, that price hit our take profit and then continue with the trend. So another winning trade here on cotton. Let me show you the next one. Right here, coffee. So let's open up coffee here. Let me go back and show you when the price was right here. As you can see, this bullish engulfer, the price was here, and this was the candle when I sent the zones to the members, and we were looking for an entry condition on smaller time frame on 1 hour or 4 hours. So let's check on 1 hour time frame right here. This was the daily candle right here. So what do we have? Let me show you on 1 hour time frame. If you know that I take my entries on 1 hour and 4 hour time frame, and this was a nice double bottom pattern, and with that we had an engulfing candle right here. ATR of this candle is 1.85. Let's place your long position right here, 1.85 up and 1.85 below, something like this. Now if you want to be extra cautious and say let's place your stop loss below this rejection zone, something like this, then in that case the target will be 3.76. In that case your take profit would have been hit as well if you would have kept your stop loss below this rejection zone with this nice double bottom pattern. Price did pushed up, and in that case after that the price falls, did not want to continue upside. So this is one of the winning trade here. If you have seen this condition, if you're learning from the group, then that is what you need to look at. This is how you can make money in the financial market, just by following some rules and have your set in stone rules in your arsenal. So let's check the other one. I want to show you the gold zone right here. So as you can see, the price was right here at this little candle, and I've already informed the members that price was in the area of value, and I will now look for a sell confirmation, which is one of the bearish engulfer, which is my pin bars, inverted hammers you can call it, or my double top entry pattern. And now coming back here on the charts, did you see any sort of bearish condition after this candle? No, you did not. So we are not, then there is no reason to enter the trades. And as you can see, the price did pushed up massively. Now if you follow me in priority group from long time, then you know once the price break and close above this zone, we use this zone as a level of support that has now been broken, or we only look for the pullback trades, which is the trend continuation strategy. Now this is a trade I've already informed on YouTube that now at this point we are looking for an aggressive way to enter, which is 50% retracement, and then the price did pushed up, and I've already said that we can expect the target still 1.618 retracement, and target did push up to that. We had another condition of entering, and we had a massive push up, and imagine how much profit you would have made by entering aggressively and then entering in a less aggressive way. Price has now pushed up out of this zone. So this is how you can figure out if you're going to enter the trades from this zone. We are not going to enter the trades blindly by seeing the prices now in the major zone. All we need to see a bearish signal, and I've already shown you so many examples of that, and as you can see, the price did react from this zones 90% of the time. So the last one I want to show you, which is a forex pair, and we have a euro CAD here, and this was a losing trade we had on euro CAD, but I want to show you something interesting. Price did break and close above my zone. As you can see, the price was here, and right here at the price was trading at this level on a daily time frame, and we were waiting for the price to come back and give us a reason to enter a trade. We did have a reason to enter with an aggressive way to enter the trade, and as you can see, the price did not push up, but instead it falls. But what do we have after that? That was a losing trade in the group, but price was still in the major area of value. I did not do any sort of revenge trading by just recovering my loss. I was out of the trade, my stop loss was hit, and then what do we have? We had an entry condition, which is a double bottom entry pattern, and then we took this trade, a nice trade, and as you can see, this was 81 pip loss, and here we made 97 pips profit. So we are still in the profit, we recovered the loss, and as you can see, we are still up just by following our rules. A trade sent to the members that now we had a nice double bottom pattern, and now I'll be looking for a price to push up from here. So that is how you trade in the market, and that is how you use this zone, a very important zones in the market. If you know how to mark these zones correctly, then trust me guys, your games of trades will go up to the next level. So that is what I want to show you. This is just a one strategy we use here in the priority group. The other one is the pullback strategy, and I just want to keep it simple for you guys just by showing you these two strategies, and these are the profitable strategies you learn here. And I personally trade the other strategies, 6 to 7 other strategies, which my MMTA full course members are learning. And the reason I don't show all the strategies here, because it will just confuse you and you will start taking different sort of trades, look for different situation, and you will make more mistake. But in my full MMTA course, you have full rules of entering the trade. You know that when to enter, when not to enter, when to take pullback trades, when to take trades when the market is consolidating, when to take trades when market has been overbought and oversold. You have the exact structural plan to take those trades, because you have a full trading plan. How much take profit you need to set for aggressive entry, how much take profit and stop loss you need to set for your double bottoms, double tops, for the pullback entry, for the other strategies. Everything you will learn with the full rules, and you will learn the trading psychology and risk management as well. So if you're interested, you can check that out on moneymarkers.net, which is the premium plan, where you will learn everything with the exact rules, and priority group is free for a year with that. If not, then that's totally cool. Make sure you hit a subscribe button so that you will keep on getting these type of content every single week. And if you want to keep yourself updated with the analysis, with the commodities analysis every single day, so that we can all trade together and trade efficiently, make sure you hit a subscribe and like button. It helps me in the YouTube algorithm. So with that being said, I'm going to wrap this lecture here and move towards the analysis part of the video. And I'm going to start with natural gas, gold, silver, and crude oil, starting with the favorite commodity, natural gas. Not sure if it's your favorite commodity or not, but this is the commodity that works really fine technically. That is why it is one of my favorite commodities. So starting with natural gas. So if you have seen the first part of the video, then I've already explained you that when the price reaches the counter trade zone, it can either reverse or it can either hit your take profit and then fall. So that is what exactly has happened here. The price did push up, came back down, formed a double bottom entry pattern with this pin bar, hit over take profit, 1 ATR profit. This was a trade I've already informed members through priority DMs, and one of the winning trade. But what do we have after that? After hitting the take profit one, the price did fall. So at this point, all I did is wait with patience and look for the next entry condition, which we do not get any sort of bullish engulfer here, but instead the price has broken and closed below the previous low and made a new low right with this red candle. So at this point, as you can see on daily time frame, the price has broken below this zone and closed below this zone. Now I want to see one more red candle closed below this zone. If that happens, then we have a very good chance that the price will fall. Price is now bearish anyway, and I want to see how the market opens. If it opens gap up above this EMAs massively, then in that case the conditions will be different. But if the market opened gap up below the EMAs, then we are still bearish. So at this point, the price is bearish or we can see calculate the pullback like this, and 50% retracement, I'm expecting a pullback to right here till 25% retracement. This is my buffer zone till where we can expect a pullback to, and then a possible fall from here. So I'm not interested in taking any sort of buy trades, only looking for the aggressive way to enter, which is with my Fibonacci tool right here, which is 50% retracement, or the pullback entry. The members learn and my students learn, once all six rules are met, we are gonna take our sell trade with one of the entry candles. So this is what I'm looking at for net gas. If we have another red candle here, then move your Fibonacci tool bit below and pull up your Fibonacci tool from the lowest red candle. If that happens, then use the 50% retracement right at this point, which is 2.481. If you do not have any red candle and price starts to pull back, then use this as your Fibonacci candle. So bearish for net gas, and if price continues to fall, this is the zone from where I'm going to look for my buy confirmation with an aggressive entry in golfer or my double bottom entry pattern. But at this point, just have these zones on your chart. Use this zone that has been recently broken, which is 2.444 goes up to 2.595. Use this zone as your trend continuation zone for the possible retest and take your sell trades until the price hit this zone below, which I'm going to mention in my next video once I see the conditions of the market. So I have these zones on the chart. Look for the bearish conditions I have just shown. Just want to quickly show here on Oanda as well. Price did fall, and all we want to see a pullback of 50% retracement right here, or one of the pullback entry. If you are less aggressive way, look for a bearish engulfer and only gonna take sell trades at this point. Looking at the fact price has now broken below this previous low and made a new low right here. So not buying at this point. Buying only once price is broken above the EMAs. Let's check gold. A massive push up out of gold. Now imagine if you would have entered right here at the 50% retracement with an aggressive entry, just with one trade, how much profit. That would be a massive amount of profit if you would have managed your position. And you see the potential in the market if you wait with patience and enter the trade patiently. Now if you just exit your trade here and wait for the next condition after you take profit hit. We did have another entry condition I've already mentioned in my last YouTube video at this point. So we can still expect a hit of 50% retracement, and then the price can push up. Target can be 180 or 1.618 retracements. Yes, we can expect few red candles before the price will push up again and hit this next major level of resistance. We might get a pullback of few red candles and then possible bullish engulfer for another long trade. And with that, price hit the take profit, and that is the $13 take profit, a massive take profit you have. Now price has broken above the major area of value, and at this point you can see the price did fall from the zone below. So I'm not selling at this point. Looking at the fact the price has now broken above this area of value, let's see how the market opens. I'm only expecting a pullback and then a continuation towards the upside if I have a bullish reason to enter, and if the price continues to push up and then the 1995.27 goes up to 2005, that is the zone from where I want to look for my sell trades with one of the entry conditions. So at this point I'm not gonna sell. Looking at the fact the price is really at the highest level, it can still push up, guys, so do not get caught up just by seeing the market is at the highest point. Yes, it can fall massively, but that is just a guess. So we do not want to guess in the market. I've already shown you the conditions, the way you enter the trade with the perfect entry condition. So that is what I'm going to look here at this point. If we have a pullback followed by a bullish engulfer, I'm only going to take long trades until the price hit this zone. So keep these zones on your charts. Once you see a condition, you can enter your trades accordingly, and I will also keep you guys updated with the moves in my next video. Let's check silver. Okay, silver has broken above the major area. As you can see, the price has now broken above, and looking at the fact we are only expecting a pullback from here. Now I will use this zone as a trend continuation zone, and with the Fibonacci tool, something like this, we can expect a 50% retracement and then a push up again. So only expecting a pullback. If you are an aggressive trader, 50% retracement will be your limit, buy limit order, and targets can be 180 or 1.618 retracement. So just using this zone as a trend continuation zone, you can also get a retest of this zone and then a possible push up and a continuation towards upside. So not selling at this point until the price hit this next level of major resistance, which I'm going to mention in my next video after looking the market conditions. So keep an eye here and keep an eye on zone that has been broken recently, and the zone is 22.02 goes up to 22.20, a zone from where we can expect a retest and a possible push up. Finally, crude oil. We have a double bottom pattern right here, and if you would have entered here, little bit below the price, let's say you have caught this move, and in that case, the ATR of this candle is 1.6 and price did pushed up $1.6, and that would be a take profit, a little scalp out of crude oil. Now price is still in the major area of value. As you can see, we have this pin bar, and let's see if it's a valid 382 candle or not. Yeah, it is a valid 382 candle. In that case, I sometime enter a little bit above this candle with the buy stop order, and looking at the fact the price is now in the major zone, 61.63 goes up to 65.84. I'm expecting a push up from here. This whole zone is my buying zone. If a price falls and form a bullish engulfer or double bottom, I will still look for my buying condition. But if you want to enter in a less aggressive way, you can have your stop order, buy stop order here, and I'm expecting a little push up from here, and the ATR is 1.6. We can expect $1.6 push up from crude oil as well. So that is it for commodities, guys. I hope you got a value out of this video, and if you have made it to the end, then do not forget to hit the subscribe and like button for me so that we can all trade together and trade efficiently. Hope you trade green rest of the week. See you guys in the next video. Have an awesome weekend. Take care.